We have to start with Nvidia, right? It's all we've been hearing about. Ticker NVDA. Shares have been down nearly 2%. So basically, the issue is that SoftBank sold its entire stake in Nvidia, pocketing about $5.83 billion. So what it's showing is that the company needs more money to kind of chase these number of projects that it has, right? It has Stargate data centers. It has AI robot manufacturing sites in the U.S. that it needs to put its money toward. And the company said the sale, it has nothing to do with Nvidia itself. Now, but it's the timing, right? It happens during this growing debate whether, spending by these tech firms like Meta, Alphabet are going to produce returns. But if you look back, it's not the first time SoftBank sold out of Nvidia. We saw it back in 2019. Then it started buying back small stakes in 2020, and it kept buying. But SoftBank's portfolio, it also includes a lot of other AI companies like OpenAI, ByteDance, Perplexity AI. So they're stocked up, but they need to kind of put their money in different places.
When Lisa say that, let's stop. The Detroit Lions blue button. I'm new, folks. Paul, when you hear Lisa say that, how do you interpret OMG, Nvidia? It's a pullback.
I don't know. I mean, the long-term trends on AI. I mean, we just heard from the earnings cycle we just completed here for the tech companies. Boy, they're still spending huge amounts of money, and they show no signs of slowing. So it's got to be good for them.
Peak 212.
Yep.
199. Lisa's good story. 195. It's cratered down $4. Are you ready? My long-term exponential moving average. It's gone so far so fast. $30 below where we are.
Wow.
162. The thing is incredibly extended in a bull market surge.
$4.8 trillion market cap.
Exactly.
Trillion.
It's ginormous.
Even though Nvidia is currently the most valuable firm in the world, a leading Wall Street analyst believes that the journey is far from finished. Ananda Barua of Loop Capital has increased his price target to $350, believing that the stock would increase by an additional 75% in the upcoming year. According to Barua, one of the top 5 experts, Nvidia is poised for what he refers to as the next golden wave of AI adoption, a new surge in demand that will keep the chip giant well ahead of the competition. He informed clients, "We are at the beginning of another significant leg of stronger than expected demand." According to his analysis, Nvidia's GPU shipments are expected to almost double in the upcoming year and a half, increasing from 1.1 million units per quarter to over 2 million by the beginning of 2027. He claims that such growth could easily support a considerably higher price by pushing quarterly earnings close to $3 per share, or about $12 yearly. And that is before Nvidia's software division truly takes off, which Barua thinks has the potential to become the company's next big growth engine. The announcement of Nvidia's Q3 earnings on November 19th is highly anticipated by investors. Since Nvidia is at the core of the AI business, the company's performance will, in part, reflect the state of the sector overall. As pessimism about AI grows, this is placing a lot of pressure on the business. According to Jensen Huang, CEO of Nvidia, AI is not a bubble like the dot-com boom. Some experts, like Jeff Bezos, think it is more akin to the biotech bubble of the 1990s, while many others think it is a bubble. According to the Financial Times, Huang said that the company has already secured $500 billion in orders for its AI chips over the next 5 quarters, making it easy to gauge its progress in the AI area. Nvidia's profitability and the usefulness of its hardware are undeniable, but the software side of the AI bubble is very different. Should that side fail to turn a profit, we most definitely aren't in a good bubble. We must take OpenAI into account as the biggest AI participant in the software market in order to ascertain whether or not that is the case. According to Reuters, the business has pledged to invest $1.4 trillion on developing computing resources over the next 8 years, despite the fact that it is now unprofitable. Microsoft's investment in OpenAI is lucky, even if it is a private company that does not disclose its earnings. According to a Microsoft securities filing, OpenAI's third-quarter losses exceeded $12 billion. Sarah Frier, the CFO of OpenAI, reportedly suggested that the government's intervention will enable the company to take on further debt. However, the White House's czar for crypto and artificial intelligence, David Sachs, stated that the federal government will not provide a bailout for AI. In their most recent research note, Vivek Arya, an analyst at Bank of America, and his colleagues addressed this concern about AI. The widespread concern about AI capital expenditures, according to analysts, is reasonable, but probably a contrarian positive that will lessen overpopulation. We believe that the common argument that AI stocks must be overvalued because OpenAI cannot justify 1.4 trillion of long-term commitments is a lazy/cherry-picked argument, they added. The team pointed out that OpenAI's expenditures are still pending and will be limited by real-world constraints like data center space and power availability. The majority of AI investing is being done by public hyperscalers that are improving their infrastructure, and they are making money. At an undemanding price-to-earnings market multiple of 24, they said that Nvidia's $500 billion in 2025 to 2026 data center orders shows that the stock can grow sales/EPS by 50% and 70% YoY. According to analysts, the daily noise surrounding China's restrictions has no bearing on the short and medium-term financial projections. In a research note sent to the street, Arya reaffirmed his buy recommendation and the $275 target price, which is within Nvidia's historical forward-year price-to-earnings range of 25 to 56 and is based on 44 times his projection for the price-to-earnings ratio excluding cash for the calendar year 2026. He said that Nvidia's dominant position in the rapidly expanding AI compute networking industries justifies the multiple, which is counterbalanced by the cyclical nature of the gaming industry, the lumpiness in global AI projects, and worries about power availability. The Arya team identified the following negative risk factors for Nvidia: weakness in the market for consumer-driven gaming, competition from large publicly traded companies, impact of limitations on compute shipments to China that is greater than anticipated, sales in the data center, auto, and new enterprise sectors that are erratic and lumpy, the possibility of slower capital returns, increased government examination of Nvidia's hegemonic market share in AI chips. According to a Bloomberg story, Nvidia and Deutsche Telekom are constructing a $1 billion, $1.2 billion data center in Germany that is expected to start operations in early 2026. According to the companies, the project is an enterprise-grade, independent platform called the Industrial AI Cloud. The new platform integrates Nvidia AI and Omniverse digital twin systems with Deutsche Telekom's operations and infrastructure. During the APEC summit, Nvidia announced plans to provide more than 250,000 Nvidia GPUs to South Korea's AI infrastructure across its AI factories and sovereign clouds. The Ministry of Science and Information Technology, MSIT, in South Korea intends to install up to 50,000 of the newest Nvidia GPUs. Together with NHN Cloud and Kakao Corp, Nvidia Cloud partner Naver Cloud will install 13,000 Nvidia Blackwell GPUs and additional GPUs in the first phase. The business also revealed intentions to construct a new AI plant in collaboration with Samsung Electronics. To create the foundation for AI-driven production, the AI factory will integrate Nvidia's platforms with Samsung's semiconductor technology. Samsung's semiconductor AI plant will be powered by more than 50,000 Nvidia GPUs. Its goal is to directly incorporate modern chip fabrication with rapid computing. After Citi increased its price target to $220 from $210 and established an upside 30-day short-term view, stating that the chipmaker appears poised to surpass expectations at the upcoming report. Nvidia's price increased by roughly 6% on Monday. Nvidia is expected to guide fiscal Q4 revenue around $62 billion, according to Citi's Atuf Malik, who projects better Q3 sales of about $56.8 billion compared to a street consensus of about $54.6 billion. A range of roughly $63 billion to $64 billion was also suggested by UBS analysts, indicating a larger potential for Q4 revenue and highlighting the strong demand for AI infrastructure among hyperscalers. The bullish calls were supported by analysts who pointed to recent operational milestones, such as significant shipments of Blackwell GPUs, as a major growth driver. In early trade, institutional and retail sentiment were positive. However, several analysts caution that geopolitical and valuation risks may maintain volatility high before the earnings announcement on November 19th. For indications that Nvidia can maintain its AI pace, investors will be scrutinizing the company's sales, gross margin outlook, chip supply updates, and exposure to China. The renowned Masayoshi Son-led Japanese IT holding corporation SoftBank made $5.8 billion when it sold all off its Nvidia stock. According to rumors, the funds will go toward other tech ventures that Sun could think will generate higher profits. Perhaps in order to finance other tech projects, SoftBank sold its whole interest in Nvidia for $5.8 billion. SoftBank might think that the majority of Nvidia's growth, nearly 1,400% over 5 years, is to blame, because they were never taught that there are two entirely different approaches to wealth accumulation. Some investors succeed, while others fail. Learn about both here to avoid making the same mistake twice. SoftBank owns stock in a number of artificial intelligence, AI, startups, including OpenAI. It is also a part of Stargate, a massive AI infrastructure play in the United States. On January 21st of this year, the White House launched the $500 billion project. SoftBank did not say exactly where the funds would go, but it might be a sign that Sun thinks Nvidia's run-up is mostly to blame. Over the last 5 years, its shares have risen by about 1,400%. With a $4.8 trillion market valuation, Nvidia is also the most valuable corporation in the world. It's impossible to understand Sun's thoughts. Concerns regarding Nvidia's future have begun to surface. One of the reasons is that, as part of a trade battle with the United States, its high-end chips are prohibited from entering China. China claims to be able to manufacture semiconductors that are comparable. Additionally, there are worries that the business is about to implode and that AI valuations have reached a bubble. SoftBank might simply require the funds. According to the Financial Times, David Gibson of MST Financial stated that SoftBank Group has overcommitted, estimating that it has committed $113 billion in investments over the long run, but only has $58.5 billion in finance capacity. If Sun made the correct decision, only time and the price of Nvidia's stock will tell. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Was I making too big of a deal about the $76 billion? Because if your internal documents say you're going to lose $76 billion in 3 years, even for OpenAI, that is a lot of money.
Yeah, it's a great point. Good to be with you, Brian. The overall bubble case, we've heard the Burry story come up, is largely rooted in this OpenAI $1 trillion plus of expense, multiple years of losses. Is this going to become a problem? And I've had the benefit of spending time with some of OpenAI's investors, some of them that have come in at rounds at, $250 billion. And I've asked them the question about this kind of endless liquidity. And the bottom line is that this is not a company that's just going to be the application layer. This is a company that its biggest backers and investors believe will become the largest hyperscaler in the future. So it isn't just going to compete for these software and for these ChatGPT and video making models. They are going to be focusing on taking over this AI layer, going down the path of Anthropic, playing in the enterprise, developing these bigger models, and then ultimately developing a model to make money. But the patience, for me, it's very hard when you see what Anthropic is doing. But at the same time, the investors said the appetite, just like Lisa Su said today about AI, is insatiable. They have oversubscribed rounds, and that $1 trillion IPO is very real. So they can bet on this long term, even if they don't get to profitability, and they'll still have the money to keep rolling forward.
Okay, Michael Burry, best known from The Big Short. He was a short seller of subprime. We believe, because he posted it to X, and we looked at his 13Fs and some other things, that we believe he is short NVIDIA and maybe Palantir via the options market. Again, we can't know. It looks like he is. He also just posted to X, kind of accusing some of these hyperscalers of manipulating accounting rules, because what people don't realize, that semiconductors, like the chips that NVIDIA make, they die. They need to be replaced. And that he thinks they're not factoring in a fast enough replacement cycle, effectively kind of skirting accounting rules. It's complicated. I tried to make it simple. Dan, is there anything here?
Yeah, is there a there? I mean, we talked about CoreWeave and its selling today under pressure. It's not directly related to depreciation, but one of the concerns around CoreWeave has been specifically this multi-year depreciation. It is buying so much NVIDIA. Will this hardware last for 5 or 6 years? there's really a story on both sides here. TPUs that Google produced, these Hopper instances, we heard the CEO of CoreWeave talk about renewals of contracts on these older chips for 95% of the value still today. So these things are lasting longer than a few years. But at the same time, the argument on the other side is that these new chips, Nvidia, Jensen's coming out with a new generation twice a year right now. And these new generations are so much more efficient. And with the cost of infrastructure, the demand on energy, there is a there. Having said that, I think he's grasping at straws to say it's fraud or suggest they're doing something illegal. I think they're using the maker's depreciation schedules, the accelerated depreciation schedules that are available to them to show income. And as long as these things continue to run and can continue to be monetized, I think that these companies are okay. And I think they're following rules and depreciation the way it's been intended to be followed.
Because fair enough, but I want to make this point because I talk a lot about energy, as you know, Dan. We talk a lot about oil wells. They can go dry. You need to keep investing money so you can get new oil out, right? And many people would argue that the oil industry is underinvested. AI and the hyperscalers, they're the same way, right? These Nvidia and AMD and whatever chips you're using, they don't last forever. In fact, some people might suggest they last a couple of years, then you have to replace them. So every couple of years, you're buying more. You're buying more. I don't think that's a story that's widely reported or understood.
Yeah, I think there is buying more. I think that the every couple of years that all of them need to be replaced isn't true, but some of these most intense workloads are definitely, you've heard Sam Altman and Elon Musk say our GPUs are melting. This is that capacity constraint. And to your point about energy, there is a reason that these new interesting AI utility companies, the Ciphers and the Iron Limiteds have been popping up of interest because they're bringing together that energy, capacity, high performance compute, AI, and building it all in one place. CoreWeave today got knocked mostly not because of demand. He said insatiable demand as well, right on CNBC. I heard him. But they got knocked because building these data centers is hard. You know this from being in energy. Building the infrastructure to build the capacity is hard, and CoreWeave doesn't control it. And that is one of the biggest issues right now is that how fast we build is rate limited by things like turbines and thermals and things that have nothing to do with the chips themselves, even if we can build those fast enough.